Welcome back. For this strategy to be effective, first, you need one thing. That one thing is your EMA first. You need EMA and your market structure. You don't have to be trading 1:1 RR, because I won't lie you, this market you can come in a week and you may lose 5 trades. The market will not tell you what they will do. And most of the mentors who have been in this forex trading, they will not really tell you the real act of this. That is how the market behaves. At times, most weeks you may come in, you will lose 5 trades. You come in another week, if you are trading 1:1 RR, you are trying to recover your past week losses. Before you know, you make more losses. But why can't you stick to one thing and make it your own? That's why I brought out this strategy for you guys. So, no strategy is 100%, but it's something that if you come in this week, you make losses, at least if you are able to make a win next week, you should have something to keep for yourself. As in, you should have little thing to look back to, that you made profits for yourself. Making profits and keeping it is the main deal, not about just you making profit. And can you be able to make an account of the profit you made? So, one, you check out for this EMA, which is moving average. It is not exponential. Okay, let's go to my indicator. Let me show you the moving average that I'm using. So I'll go to my indicator. I will type EMA. I'll type in EMA on the search box. I'm doing this for the sake of new subscribers, because let them know how to implement this from scratch. So once you type EMA, you scroll. You will see an EMA popping up, not exponential, not the double, not triple, not reborn. Keep going. You come across this one that is written 20/50/100/200. You click on that very one by DA Suite. Once you click on it, you close the interface, then you go back to your chart. This is not how it's going to appear on your chart. You are the one to set it up to what you want. So you click on the EMA, the setting. Once you click on the EMA setting, you've seen that this EMA has different plots. I was the one who disabled it to fix what I wanted to do for me. So if I'm to enable it, this is what you will see. You will see multiple EMA, you will see multiple averages crossing each other. So therefore, I'm going to click on any of it. Even if you want to remain any EMA here, that should be this red one here. It should be this red one here and this orange one. Then once it comes to this plots, go to the EMA again so we can disable the ones we don't need. So you go to the EMA again, you disable plot, the third and the fourth one. You disable the fourth and the third and the fourth one. Then you click on OK. So you have these two EMA on your chart. The red one, which happens to be your 20 EMA, and the orange, which happens to be your 50 EMA. So you allow it to be on your chart. There is something I want you to take home here. So once you're done setting up your EMA, take note, this is your 4-hour chart. This is now for you to start marking out the highs and the lows. This is when you start marking out the highs and the lows. If the market is bullish, because this EMA, it's telling you the trend. This EMA shows you that the market is above. It is bullish. The market are above the moving averages. So the market is bullish. So therefore, all you want to do is for you to be prepared for the high. Since it is bullish, you are only concerned about the highs and the lows. How will you do that? It is for you to mark. Here was our first example. Here was our first example. This very high here. It is the high that you concentrate in. You concentrate on the high if the market is bullish to the upside. So you see that as the market is on this EMA, if you really know what you are doing, you can make more money on counter trade. But if you don't know what you are doing, that is when it becomes a taboo. So you see this market break structure to the downside, and it also closes below this EMA. The candle closes below this EMA. This shows you that this market is about to be bearish. So what will you do? It is for you to wait for the high. You are waiting for the market to come back and grab this high where you marked, to grab this high for you to take the trade to the downside. You were waiting. The market comes back and grab the high at this point here. The market grabbed this high here. As the market grabbed the high, you are looking for a candlestick confirmation. This candlestick confirmation will not happen at your 4-hour chart. You have to move down to a smaller time frame for you to look for this candlestick confirmation. On this channel, I've dropped a lot of tutorial videos, free tutorial videos on this channel. So it's for you to pick one and stick to it. Or if you want to trade the way I trade, because it is not all the videos which I drop on this channel that I use. I'm just trying to help out, because 1:1 RR, it's not the way. Because if you lose 5 trades in a week, you come in another week when you are targeting 1:1 or 1:2 RR, before you can really grow that your $100 to what you can take from it and buy yourself a gala, it will be hard. It will be very, very hard for you to do that. So that's why I come up with my strategies. That's why I come up with most of the strategies that have been made on the industry. I have to make sure I add my own idea to it to show you how you can take this strategy to something you can really make money from. But I'm not using all the strategies. I have my own personal and trusted strategies which I do use to enter the market. So therefore, if you want to trade the way I trade personally, you want me to coach on one-on-one class, you can contact me through the link on the description of this video. I'll drop my Telegram link on this video. You can contact me for that. If you want to join my VIP, which is my signal group, you can as well do that. It's not costly, it's very cheap. You can as well do that, because I'm here to help. If you want to join my free channel, the link to my description is also on this video. You can check it out. You can reach me on those links. So let us get straight to the point. So therefore, when the market takes out this high, you can move to your smaller time frame. It may be your 5 minutes. It may be your M15, 5 minutes or M15 for you to take your trade to the downside. So you see that this very first breaks, this very first high that got taken out. If you were to take this trade, because this low here hasn't grabbed, supposed to come back and grab this low if this trade was successful. So for it not to come back and grab this low, this is to say that this very one was a failed setup. No strategy is 100%, but the only thing you should take home is, once you take one trade, you should be able to cover up for your 2 week losses. So this one here was a failed setup. Then you keep looking for another one. Since that one was a failed setup, then we see another high right here. This leg right here created another high. And then what happened? We see that there was a structure. This high was able to create this structure right here. The high was able to create this low right here. You get? It was able to create this low right here. But if you can check it properly, you notice that this low was able to grab liquidity to the downside. So when it comes to market structure break, you can either use the wick or you can use the close of a candle for you to mark the market structure breaks. That is to say, you can watch out for what works for you. It's either candlestick breaks or the wicks of the candle as a break of market structure for you. So at this point, we see that the market was able to grab this structure right here. Then we mark here out. Because the market grabbed there, we mark this out. Where do we really mark? It is this very low right there. So this low here is what we are talking about. So once the market comes back and grab that low right here, that becomes your break of structure, which you've seen here. Then coming back, it's for you. This high is what you focus on. Then you wait for market to come back and grab this high. Once this high is being grabbed, then you start looking for your entry criteria. As you can see, the high was grabbed at this point right here. The high was grabbed at this point right there. So that is when you move down to your smaller time frame and take a trade to the, so this is it. Once this high got grabbed, this is when you move down to your smaller time frame and you look for your entry criteria and you take this trade back to the downside. So what are we going to do right here? You can see this structure was already closed below the moving average. The market closed below this moving average and as well grab this liquidity right here. So we move down to our M15 and look for our entry criteria. Let's move down to our M15. So you come to your M15. Here is my M15. I'm supposed to go to 5 minutes, but I don't want to go a bit far. If you are to go to your 5 minutes, only this one trade alone can give you 1:40, 1:30, because this is gold. It's very volatile. So only one trade here can give you 1:40. But if you are using M15, you can go between 1:15, 1:20, or 1:25. So I'm using my M15. You can see here was the high. Here was the previous high. And you can see that this market came back and grabbed that high at this point. It came back and grabbed the high. It grabbed the high right here. And then you look for your confirmation once the market grabbed that high. What will be your confirmation? It's either a candlestick confirmation or a breaks in market structure. You can see that everything was here. As the market comes back and grabbed the high, there is a candlestick confirmation right here, and there is a break of structure right there. We have everything lined up. We have break of structure, we have candlestick confirmation. So what is our candlestick confirmation? This is engulfing candle right here. Very sweet engulfing candle. Very sweet. You can see this is engulfing candle followed by another engulfing candle which grabbed this liquidity that lies below this zone. So we have a break of structure as well. So then you wait. Then you wait for the market. Then you will wait for the market to come into this OB, which is the last bullish candle before the market breaks structure to the downside, which happens to be this candle. Do not forget to subscribe to this channel, turn on notification bell for more tutorial videos to come. If you are already a subscriber to this channel, thank you for watching. And so this is the last bullish candle that led to this break of structure to the downside. you mark out this candle. That is why I'm using this very line to scale out the candle. So you mark out the candle, you scale it to the future. As you can see, the market come into this candle right here. You take your short tool, you place it right there, and you take your trade to the downside. Your stop loss come above this zone right here, and you target your 1:10, 1:15, 1:25, depends on what you go for, but I may go for 1:20. Go for your 1:20 or 15 RR. You can see the market still going down. Your 1:20 was there and the market was still going down. You don't want to be greedy. You just take your 1:20 RR and you are done. You leave the market for other people. So even though you catch this kind of movement in a week, you are okay. You just have to come back this week. You check for it. If you can't see it, you go back home. You come back another week. Instead of you coming trying to grow your $100, you ended up losing everything. It's better for you to stay not to see a trade, a good trade, because when you are using a smaller account, you have to wait for good trade for you to take, not just taking a trade because you want to take a trade. Like the way I trade, if my entry criteria doesn't match, I will not want to force trade because I was here in this industry. I know when I was eager taking trade, it ended up losing a lot of trade. But the moment I start sticking to one thing, even if I lose trade, I know quite alright, once I win, it's going to cover up all my losses and put me where I'm supposed to be. So this is why you should look for a good strategy that will help you in this industry, because it's not just by taking $1 to $1 million. Do you know how long? Do you know what they do? Do you know what is behind the scene? So you have to make sure that you practice. And if you want to trade the way I trade personally with my own strategy, you can hit me up through my Telegram link on the description of this video, or join my VIP channel, which is my Signal group, or join my free Telegram to ask any question. So I remain Aqua FX as I sign out. Peace.